Thank you very much, Kathy. Well, the big story today is that the local currency has finally broken through that 18 rand against the US dollar mark, levels last seen at the height of the COVID-19 pandemic in 2020 amid a global market crisis. The dollar remains king, and despite its stretched overvaluation, there is nothing to suggest a correction is imminent. The pound, on the other hand, is also slumping to a record low, prompting a speculation of an emergency response from the Bank of England as confidence evaporated in Britain's plan to borrow its way out of trouble, with spooked investors piling into US dollars. Joining us now is Cilliers, the director at TreasuryOne, to take a look at how these latest developments are going to impact us. Andre, thank you very much for your time. Let's talk about this impact on South Africa, particularly when we think about how the rand and the pound have actually lost ground, including the United States, particularly those interest rate decisions that we saw last week.
Yes, good evening, and good evening to all the viewers. Yes, it's been an absolutely interesting week since last week when we had the Federal Reserve starting with their interest rate increases of 75 basis points, on which we followed very suit and very quickly after our MPC meeting, also with 75 basis points. And then came the next day, and there the British only increased their rates by 50 basis points. Now, already after the US interest rate hike of 75 basis points, we did see some movement in the dollar, and we had seen some of the currencies weaken against the dollar. But the 50 basis point move by the British was way below what was expected. One needs to take into account that the inflation rate in the UK is well above that of the United States of America. And even though they're at higher levels on the inflation, they opted for a lower increase in interest rates. Now, once again, we have to take into account that their economy is much weaker and far more vulnerable to what happens in the international environment at the moment. And everybody keeps on speaking about oil prices adding to the inflation. But when you look at the Northern Hemisphere, they rely on natural gas a heck of a lot, and they're going into their winter period now. Now, if you look at natural gas, that had actually increased substantially more than what the fuel price or what oil prices increased at even at the height of the increases of oil price. We're speaking somewhere around 350 to 400% the increase in natural gas prices. So that contributes a heck of a lot to their inflation, and that filters through to food inflation and all other products as well, and puts their consumers in a very difficult position.
Andre, the British pound, when it comes to those concerns of it weakening to historical levels last seen 37 years ago, was the interest rate decision and inflation the only reason for these changes? Are there other factors that are actually making sure that the pound is not gaining traction against the US dollar?
Yes, and not only the interest rate was the cause of this. We must keep in mind that Liz Truss, the new Prime Minister, also announced quite a few measures. She's speaking about lowering of taxes, but also want to introduce measures to assist the consumer in terms of their energy bills, etc., basically with direct subsidies. And that would simply mean that the British government needs to go and borrow a lot more money. Now, when you borrow money in times of higher interest rates, your existing debt or debt burden becomes much bigger at higher levels of interest and adds tremendously to what your interest bill on your debt is. And that will place a lot of problems and strain on the British fiscus. And yes, even though lower taxes might affect the economy positively, that will be over a longer term, and the effect of the higher interest rates and debt burden will be more immediate. So that also contributes to the existing problems following up on the lower interest rate increase that they've imposed.
The big question is, are we at a turning point in inflation, or will interest rates rise further along with inflation? And what are some of the key drivers that we've seen? You've spoken about the increase in the amount of energy that country spends because of those supply chain disruptions that we've seen from the Russian side. Is this the last that we've seen of interest rates increases?
I think we might have turned the corner on the increase in gas prices, and I think we also have turned the corner on the increase in oil prices. What needs to be kept in mind is that with all the interest rate increases, due to all the previous things that we've mentioned, places the economies of Europe and Britain, also the US, I don't think we will escape it. And so will very few other countries on a path of recession. So chances are that the world economies will go into recession, and that will obviously have an impact on the demand for these products. We're already seeing the oil price, for instance, coming quite a bit lower, because then your usage of gas and your usage of oil comes lower, and if the supply remains at more or less the same levels, then you see lower prices because of that demand. And that will, I'm not going to say dramatically influence positively on the inflation, but it does turn, in my opinion, the corner on that and places it on a downward trajectory, because not only is the demand lower, but also your consumer has a lot less to spend in his pocket. So the demand comes lower on all fronts, on all products, hence your manufacturing will also be lower, and because that's lower, there your usage becomes lower. So yes, I do think that we have actually turned a corner. I do not think that interest rates currently is in line and high enough, especially in your developed countries, and we would still see increases in interest rates trying to curb the inflation spiral that did occur. So for the foreseeable future, we will still see interest rate increases out of those first world economies. I think on the emerging market front, and I'm speaking here very specifically about South Africa, we will also have one or two more interest rate increases, but I don't think those will be 75 basis point increases. Those will most probably be a bit smaller and a bit further apart, maybe one more for this year and then one in the first quarter of next year. But then we have turned the corner and we will have reached the height of interest rates. And from there, it will also start declining again.
Andre, the Bank of England is expected to hold an emergency meeting quite soon to respond to what is happening. How is the bank likely to respond to investors who are obviously spooked by rates increases and the UK's plan to borrow more money? A lot of experts are saying that there should be another interest rate increase there.
There's a possibility that it could be another further increase in interest rates on the short end to curb any speculation against the pound. We must not forget that this has happened in the past. That people speculate against currencies, especially when things like this happen. And central banks have in the past responded aggressively with interest rates by increasing interest rates. In other words, keep making it very expensive for people to keep short pound positions. The problem this time around is the consumer is under immense pressure, and that makes it difficult for them to just use monetary policy and higher interest rates to try and stop that. But we have seen, for instance, last week that out of Japan, we had intervention into the FX market to stop the downward spiral of the yen. So that's also one of the possibilities that the Bank of England could also go into, is direct intervention into FX markets to try and stop the fall of the pound and the speculation against the pound. But we'll have to wait and see, because there's a few things that they can do. But yes, they are in a tight spot and in a difficult position.
Andre Cilliers is the director at TreasuryOne. Andre, thank you very much for your time talking about the plummeting of the rand and the pound sterling, particularly since the two countries are major trading partners.